think I should be up and running here. Good evening, guys. It's 6:15 New York, March 19th, 2020, and in this video, I am going to be going over the ES relationship with the VIX futures. So, on the left-hand side of my screen is a 30-day hourly chart of the VIX. On the right-hand side of my screen is the 30-day hourly chart of the S&P. What we're going to do here is I'm going to show you guys basically, from the beginning, what the sell-off looked like in the ES versus what it looked like in the VIX, and how you can use the VIX to basically pick support and resistance levels. So we're going to go back starting to February 17th and February 18th on both of these. So I'm zooming in on those dates. Here's the 17th and the 18th. Okay, I'm going to zoom out a little bit. One of the things you'll notice, and it might be a little faint, but my cursor will line up. There is a vertical line that will be on both charts to overlap the time. So we had a VIX futures rollover into the March contract at the time. Now we're in the April on the 19th. Okay, so that's a Wednesday. We just rolled into the next contract. One of the things you will notice is if we take a look at this Monday, this is on the continuous contract. If we take a look at the Monday, that was basically where the VIX was. I'm just going to back out here a little bit on the S&P. This is where the VIX had made its low. And the S&P at that time was around 3390. Well, going into Tuesday and going into the roll, one of the things, if you pay attention to the VIX, what we noticed was the VIX was moving higher and holding halfway back longs. That halfway back long held a target. At the same time, there was a halfway back short in the S&P 500. Okay, if you can look at the cursor where it is on the screen on the right and the screen on the left. So on the screen on the left, there's just a vertical line. You'll notice that the VIX actually trades into its 50% retracement long, which is 1475. What the ES doesn't do is the ES does not hit its 50%. So here is our first example of when the VIX is trading its support in its long setup. The S&P does not necessarily have to trade into its resistance level. So your entry in the S&P is not necessarily always at the halfway back short. And this is a new development in the markets, which is interesting and is actually quite scary at the same time. The VIX support level, when the VIX trades its support, the S&P is a short. Okay, regardless, if the S&P is at a 38.2, when the VIX is at its 50, you sell the S&P. Okay, you look for that free trade. So this was our first halfway back long here in the VIX. And then the futures rolled, and we had another traditional here. Okay, what was interesting is although the VIX futures were rolling and we were completing long setups, we then completed that long setup here into close. The VIX was making higher lows, and the S&P actually made a higher high as well. So as the S&P made what is currently its all-time high, take a look at the left side of my screen. If you see where that vertical line is, that vertical line is at the next halfway back long. So the VIX traded its halfway back long, and as once again, here's the key. When the VIX trades its halfway back long, what can you do with the ES? Okay, that's where it trades its halfway back long, literally to the tick, the 50% retracement long. What can you do with the ES? You can sell it. The ES is just you would just be selling highs in the ES, but you can sell the ES when the VIX trades its support. So the VIX trades its support, we complete profit targets. The next day, we have a pretty decent spike in the VIX, and that's Thursday. This is when the selling actually really began. There was this big candle. It was about 11 o'clock on Thursday. We spiked, and that's really really when the selling came out of the woodwork. Okay, there was a big spike down, thousands of futures contracts sold, and then we gapped up. We gapped up in the VIX Sunday night, and we gapped down in the indexes Sunday night. We have never looked back. This gap has never filled. Now, moving forward, there was this 50% retracement here, here. We had starting, this is the 21st of February, okay? The Friday, the 21st of February was basically the next week is the first week the market lost its bed. It lost its bed. We had an extension from Friday's high, trade once. There it was twice. And every single one of these extensions in the VIX is a short entry into the S&P. There it is again. That's 3 times. You can consider this 4. I know it looks a little sloppy because there's bad wicks. This is 5. So literally 5 times, and we actually complete this. And I'm just going to go over the entries here in the VIX. If 5 times we complete a full negative 61. The markets are getting crushed as this is happening. The VIX then trades the same anchor new high. Here's 6 times, okay? As the VIX is trading that same anchor new high, let me back out here on the S&P. It trades that same anchor new high, 38% retracement on Wednesday. On Wednesday, February 26th. At this point in time, there is an extension from 32.89 half to low in the ES. We run into that 38.2. But once again, when does the ES sell? It sells when the VIX trades support. So this is the 6th extension that completes profit targets. From there, we have the 7th. The 7th extension. That 7th extension has multiple tests. We have our first test here at 3 a.m., the European session. Okay, let me just mark this up. That's 38. At 3 a.m., where is 3 a.m., the European session? At this point in time, it's this candle high. The next day, we open in the morning at 10 o'clock on Tuesday. This is where the Fed cut rates. Okay? One of the things that was going on, which was kind of interesting, as the VX retested this extension Tuesday morning, the VIX was an extension long, so the S&P snapped into its full 50% retracement. And this was when the Fed did an emergency rate cut, which is amazing. We went from being at an all-time high to 1, 2, 3, 4, 5, 6 days of selling. We had one rally and then a Fed rate cut. This is where, right here, the Fed came out and they said they were going to do something. Well, next week, Tuesday, they did something. The S&P was holding a full halfway back short, but the VIX was still inside its extension. Okay? And that's why, we're aware of the sequences and how they trade, but when you line them up with the VIX, they're way, way, way more powerful. Our upside target of the VIX was 33.03. Our downside target in the S&P was 27.25. We've fully blown through those levels at this point in time. So I believe I said there was 7 extensions, right? That was 7. Well, where was number 8? That same anchor from that Friday that the gap up traded an 8th time. And this is why this extension anchor is so important. It's so important. The 38% retracement is 39.57. We traded it first. It was like at night. And then we ended up retesting. And this is where we had a double top of the S&P as the VIX was still inside its extension. We had a double top in the S&P. We closed at highs. And I believe it was like just like a halfway back. We had this traditional. It was a very weird sequence in the S&P. But we had that traditional to this extension. But the VIX, inside of its original support, double topped. And then what did we notice at the end of the day? And I had pointed this out at that time. One of the things we had here at the end of the day was the S&P was making a new high. The S&P was making a new high. What was the VIX doing at that same time? This is the same time. So look where my cursor is on the left side of your screen. We're in a halfway back long in the VIX. What is that? A halfway back long in the VIX is a what for the ES? It's an entry into the short trend. So the VIX closed that day at a halfway back long. The ES was a double top. In the after hours, the VIX had another halfway back long, and the ES had its first halfway back short out of that high. If you missed the first entry, you had your first entry short here. We went down and completed profit targets. But really the bigger picture is still that larger time frame extension from the first extension we drew. That had upside targets at 61.50, 54. Look where my cursor is on the VIX. Look at the vertical line on the right side of my screen. At the same time, the VIX completes its profit target. What does the S&P do? It creates a reversal. Okay, it creates a reversal. So the S&P, that's actually futures contracts rolled. This is last Friday. We had a massive reversal. Yesterday, we had the first rollover in the VIX futures contract since the selling has begun, and really since the selling has begun in the indexes and since the buyers have stepped in inside of the VIX and their hedges. That's why this is so important. They're hedges, okay? That same extension to the new high had a 38% retracement support at 56.70s. And what do we look for? What do we want to see when we come down to these levels? We want to see a reaction. And this is what I was saying, in the end of the day, the S&P, it was amazing. The S&P, I'm going to go to the end of the day here today. And you'll see this a lot. We're running into a double top situation here in the S&P. The VIX, all the VIX was doing, the VIX was getting smoked into the close. But the S&P wasn't going anywhere. This was the more overnight low. Look at this move. We went, and this is the overnight low. This overnight low here in the VIX lines up with these highs. The VIX futures contract sold off 10 points. That should have been an incredibly exaggerated move higher. We should have been ripping higher in the S&P with a 10-point sell-off. The S&P didn't move. The VIX did. The S&P didn't. So what does that tell us? All that's going on here is those institutions that are like literally with as big as their markets are and as big as their orders are, they are controlling the direction of the market. We come down. I'm going to go to a 5-minute chart here. We come down. Let's take a look at what happened when the VIX ran into that support level. What happened when the VIX ran into that support level? Look at the time. Okay? We were running into support in the VIX and making lower highs in the S&P. As the VIX traded its dailies, this is considered daily support. The S&P was inside of actually a 50% retracement short. Now, granted, this is sloppy. Don't get me wrong. This is a super sloppy short. The VIX is much more technical. We come out of that high and we begin ripping. So your next entry in the overnight session is a halfway back long in the VIX, and wherever that S&P is at, which we don't know in advance. You're not going to know where the S&P is when it's I don't know if the S&P is going to be at the 38.2 when the VIX trades 63, call it 63, 65. When the VIX trades 63, 65, wherever the S&P is, you sell it. If it's at the 38.2, you sell the 38.2. If it's at the 50, you sell the 50. If it's at the 61, you put an order at the 61. Just like when we ran into this VIX support, you can draw up this halfway back short. Okay, you can have it up, but until the VIX, in this, which is right here, until the VIX hits that support level, there's no orders to be had in the S&P. And at that point, what were we trading? We were trading the 61.8. So you would look to free trade the 61.8 This is a new development in the markets that's we've really only begun to notice over the last couple of years. So very important webinar. I encourage you guys to continue to watch these correlations. But when the VIX trades its support is when you take the trade in the indexes. That's when you're going to get the best reaction. Okay. So there's a question here. Got a question. Why do they hedge with the VIX versus just buying puts? I mean, they probably buy puts as well. Also, the VIX is a futures contract, which, is much different than an options contract. I don't know the answer to that question. I can only speculate as to why they hedge with the VIX. I mean, the VIX is a hedging instrument. You go long VIX futures to protect your long positions in the indexes. It's just, how the trade is structured. These are institutions. If you have $1 billion or $2 billion or call it even $10 billion of equity exposure, which these funds do, they have billions and billions of dollars long the market. They don't care. They want to protect themselves from losses. And so they understand these sequences that I teach. They understand there's no way this is random. There's no way this is random. It is clear that there is institutional programs attached to what I teach you guys. And understanding them is what gives you and I edges over the market. Okay? We can only guess, and I can come up with 5 different reasons why they buy the VIX. It doesn't matter why they buy the VIX. It just matters that you understand how it works. That's all that matters. But yeah, that's really the breakdown of this webinar. I really wanted to show you it, guys, but it's super important. If you could literally just look at these two markets, and that should be all you trade. And at the same thing, guys, when the indexes are rising, let's take a look at this halfway back. Off the open this morning, we initially sold. There was 2 bars lower. We came into a halfway back long. Take a look at when that halfway back long traded. Okay, we were making lower highs in the VIX. We had what was the high to low. The ES was trading a halfway back long. What was the VIX doing at the same time? Trading a halfway back short. Granted, it was sloppy because it's a counter trend trade. The shorts in the VIX are counter trend. So anything counter trend is going to be a sloppy trade. If you are trying to short the VIX and the VIX is in a long trend, guess what? It's going to be pretty hard. If you're trying to buy the S&P right now, it's going to be a hell of a lot harder than finding an entry into the short trend because the momentum is down in the S&P and the momentum is up in the VIX. It's really that simple. And until this sequence breaks, because this is now held, this is the 9th time, which is amazing. This is the 9th time this VIX has held this support. Now, the dangerous part now, these are new hedges getting put on in the April contract. This is really, really important to understand here. Everybody who was long the VIX was long the March contract. Well, the March contract is no more. And therefore, if you've exited, you have to exit the March contract. Well, if you exit the March contract, you still need protection. Institutions need to be protecting their capital. How do they do that? They do that in the VIX futures. So they will buy these sequences, and there is a clear end of the day reaction off of that level. That is not random. This has been known in advance. We've been following this for 3 weeks. And look at that rally. We go 57 to 70s, a 13-point move in the VIX. Okay? Now, the scary part is, and I kept saying in the room today, a lot of people are getting bullish. The indexes, there's nothing, absolutely nothing in the indexes that says we're going higher. Now, if you watch the news, there was like a cure for like this disease or whatever. The news does not matter. If you cannot get a trend confirmation of a break of shorts, which we couldn't even get up into. I was hoping we would get up into the 50% retracement from what was Friday's high to low. I was really hoping we'd get up to that level. Oops, I got this drawn wrong. I was like, that number looks off to me. It was a 2480s. We couldn't even get up into that level. We came basically halfway between the 38 and the 50 with the double top in the VIX. The VIX support was it. It's the nail in the coffin. The VIX now targets 95.75. We are already well through the all-time highs. And we're going to go even further. And where does that put the S&P at right now? 2160. And I've been talking about it for a long time here. Where do we anticipate the S&P of stopping? There's either we see a confirmation trend break, which we have not seen yet, or we are at least pulling halfway back from 2009. I mean, that is fully my opinion. That is all the way down at 20. Right now, it's 2030. I guess it won't change, but 2031 half is the full 50% retracement from the lows of 2009 to high. 2031 half. That is still 300 points below. 300 points, we're traveling 300 points a week right now. So this week was 458. Then we had an inside week, technically. An inside week was 247 points. Then we had a 537 point range last week. This week so far, 388. Now, what's going to be dangerous about what's going on now is every Friday so far, they've quote unquote saved the market. Okay? Initially, Powell came out Friday on the 28th and he quote unquote saved the market, right? So he came out, said the Fed was going to act. Guess what? They did. Tuesday, interest rate cut, 50 basis points. What happens? Market gets crushed, sold into. Doesn't help. Says he's going to cut half a percentage point. Doesn't help. Then they come out on Sunday and do an emergency rate cut. We limit down twice on an emergency rate cut. But what did they do Friday? They saved the market again. Okay, they saved the market from closing at its lows. The last thing anybody wants to see is a market that closes its lows on a Friday, because that means Monday is a disaster. Now, regardless, Monday was still a disaster on this week, but it was a disaster after the biggest intraday rally we've seen in history. So they pumped the market up only to have it totally wiped out by, 2 trading days later. Now, look what the setup is saying right now. We are going to be going into, after trading this VIX support level, which targets up at 95, which would easily send the indexes down to 2160s. Easily send them down to 2160s. If we could see this 2160 target literally hit tomorrow, that's 200 points from where we're currently trading. Without a doubt, that could trade tomorrow. But if we continue through that, what are we going to have on Monday? We're going to have our full halfway back long on Monday at 2031s. That's 350 points below. So you need to be aware, and for those of you guys who do have long-term portfolios, we're not going to know if this is the low. We're either going to have here, it's either going to come to 2031, or if we fall even further, which is absolutely a possibility, it's 1700. 1700 is basically the low of all zero, which is like the low of the S&P, right? Because it began at zero way back when, in our forefathers' time, to high is roughly 1700. So we're going to be coming down into, and this is just the first halfway back long from the 2009. There's no reason to believe that we will break trend from there. I think it's, 10 years from now, is it a good level? Absolutely. But, we are going to be hitting this level some point next week, possibly Monday, 2031. And today, it was kind of funny. I don't know how many of you guys are on Twitter, but everyone's calling it the Ackman bottom, because Bill Ackman got on CNBC yesterday and freaked out and literally almost cried on national television, and the guy's got $1 billion. So it's everyone's like, oh, the Ackman bottom, the panic, blah, blah, blah. No, guys, this isn't the bottom. The bottom isn't even close. Well, I don't know who looks at this chart and thinks it's a bottom. Okay, we're going lower. And the targets are 2160 in the S&P. I put the rest of the targets for the other markets in the chat room, so check those out. How can I help set up my pointer like yours? I think you go here, general, and then I gotta look at the settings. Synchronized crosshair positions, general, synchronize crosshair positions with the check mark, and then apply and OK, and then save it. All right, so that's what I wanted to share with you guys today. I think it's for those of you guys who trade the S&P It's really important to focus on these bigger levels. And I want to continue, guys. I want to encourage you guys to really pay attention to the hourly charts. You do not need a lot of trades in this type of environment. It's so easy to get caught up in the small stuff. Draw up the bigger levels. Be patient for them. I look at 12 markets. If you can get 2 or 3 good trades a day, that's all you need to make it in this business, guys. You don't need to be glued to the screen taking 15 trades a day. In fact, typically if I do take that many trades, well, obviously in these ranges especially, you want to focus on the bigger levels because it's just happening so fast, and every single trade requires an abnormal amount of risk than what we're used to. Say in a normal S&P market where the range is like 25 points a day, we're using 3-point stops. Well, it's not normal right now. We have 120-point ranges. We're down 42 points and it's nothing. 42-point move and the market's been open, not that long. I mean, that's from the cash session close, but still. The moves are massive. The ATR in the 5-minute, let me check it. On the 30-minute chart, it's 40 points. 40-point range every 30 minutes. On the 5-minute, they're 12-point 5-minute bars. Okay, that's $600 per contract. Okay, so that's why it's so important to wait for the best levels. And if you find yourself going in for smaller time frame levels, it's just too much risk. $600 per contract with a 5-minute ATR bar. That's just too much risk to be taken 4 or 5 trades a day. Okay, because if you're trading 2 lots, it's $1,200. If you're trading four trades a day, $1,200 of risk each time, you can end up being down $5,000 trading 2 lots if you're wrong. So stick to the bigger levels on the ones I map out and the ones you map out. But that's going to wrap it up, really. All I got, unless you guys have any more questions. I hope you guys enjoyed this video and found it helpful. It'll remain up for the members of the chat room only. Everybody take care and have a good one.